What's up? Good morning. How we doing, guys? Hope you're all having a good morning so far. Now, business first, as is typical around here. This morning, we got U.S. initial jobless claims. That came in at 228 versus 230. Fine. That came out almost an hour ago now, so volatility from there is going to be pretty much over. From here, we have a few meetings going on, 9 o'clock. Nothing that's really going to cause too much volatility. We get New York Fed inflation expectations at 10, and this is Central Time, by the way. Now, in 2022, the New York Fed inflation expectation release may and would have caused volatility and did cause volatility. In 2025, I'm not too worried about that. Maybe I'll hold off around 10, but I'm not expecting some massive move unless they say something about tariffs, so we'll see. And that's pretty much it. So yesterday was really the big news day this week. And then again, U.S. initial jobless, it is an important read. Again, it was especially important a year, 2-3 years ago. These days, it's kind of just there. And then we move on. But market inertia is always important. So let's take a look here. Daily chart is what we're looking at down at the bottom of your screen. We're seeing... There's the bell. We're seeing a lot of the same. Okay, so you can see we just saw that New York candle open on the daily chart, and we're seeing a little bit of a gap. Now, that doesn't mean that that gap has to fill, okay? What I'm really looking at is the body versus the wicks of each New York session daily bar, right? That helps us figure out, well, what's kind of the market inertia looking like, which helps us make decisions when we start taking trades here in about 10-15 minutes after these institutional orders clear out. And again, you look at that and you're like, okay, are we in a trend market? Well, the answer is clearly not. Right, we're seeing small little bull bodies, big wicks on both sides. What does that tell us? Think about it, literally. What does it tell us? It tells us that every time someone tries to break out one direction, the enemy steps in and fades it back, which causes those wicks, which means range market. And we saw a lot of that this week so far. So that doesn't mean that continuation's off the table. Again, yesterday we had a beautiful continuation short that kind of cleaned up the day for us, but it's got to line up right, ideally inside of the range, and I'm not looking to, for example, buy the top of an ascending resistance the way that I'd be willing to in a trend market. In a range market like this, the bears are going to get some confidence from any kind of ascending, descending resistance. The bulls are going to look at every single ascending support, every descending support, and say, I'm going to buy that. Okay, because it's a range market. So understanding that can help you a lot. Protect your profits and then add on top. A huge problem that a lot of people have is they're not able to recognize that shift early enough, and they give back for too long, and then they don't have enough time to stack on top. Trading, I hate to say the right way, but trading in a way that actually makes sense with the current market inertia or environment. Good morning, guys. How we doing? Christian, TC, Shato, Kev, Gabri G. How we doing? Lord of Fuse, Keith, welcome back. Panther, welcome back. What's up? Brian, higher high. How you doing? Scrumptious, good morning. Chris, how we doing? Jet, good morning. Simple Trader, what's up? How we doing? So I missed a bunch. Scooby-Doo, welcome back. Exploit the vibe. What's up? Here we are getting a push downside. Taking out that pre-market kind of flat bottom that we put in there. You see that? At least trying to. Going to be some stops there. Not a ton. Pre-market level. Right? But going to be something there. Now again, all these orders off the open. These are going to be mostly institutional orders. So we're hanging out and letting those clear. Then we can get to work here. Yes, Daniel, live stops today. Great reminder for everybody. With tariff news on the table the way it has been, guys, if you're trading naked, I encourage, which by the way is not always a bad thing, I encourage you to be using live stops. Because we could get, it sounds crazy based on what we've been seeing, but remember 2-3 weeks ago, we can get a 100, 200, 400 point move on, maybe not 400, but we saw that. We saw 400 or 500 point 2-minute bars just a few weeks ago on random news, by the way, which that can cut up your year if you're not using live stops in an environment like this. So now is the time to use it. All right, Bear's kind of taking over here. Old school, Nico, did you sort out that issue with take profit? It's all sorted. It's all sorted. So we are all set. You know, a lot of people, like, sometimes the customer service with a lot of these props, I'm not gonna lie, it's slow a lot of times. But when they do get back to you, if you get a good rep, which I would say happens probably more often than not, you get someone good. They really do look into it for you, any issue you're having. And I think a big problem with the reason that the customer service is taking a little longer lately with almost all these firms, by the way, is I think they're just growing fast. Now, they should hire, right? I mean, you would think, but that's a different conversation. Once they do get back to you, at least in my experience with Apex and Take Profit Trader specifically, the responses are typically in-depth, and they do care, and they do get things sorted. So if you're waiting on a response from one of those two as far as customer service, I wouldn't worry too much about it. Out of your hands anyway. All right, 8:35 here. Still some institutional orders. Again, those usually start to dry up 8:40, 8:45, really. 8:45 is like they're almost certainly dried up and they're all kind of through. Now, why do we hold off, right, as far as institutional orders are concerned? Well, I mean, think about it. A lot of these orders are just being executed based on much bigger moves than we're looking for. We're looking at even 3 days out, 3 weeks out, a month or two out. So their bias and the reason they're making, like, let's say a sell order is not necessarily the same reason we would. Okay, they might be looking for a 2,000 point move. Who knows? They might just be building out a position and they're kind of just selling within a range. Or they're taking a position down. They're trimming it up. And they're kind of just selling within a 100 or 200 point range. And, you know, if we're looking at 40 point moves for targets, that's kind of irrelevant to us. So we got to let those clear. The institutions kind of kill off any edge that I could get in the first 10 minutes. So I think that's true for most people, realistically. Dan, good morning. How we doing? All right, bull's attempting here, and someone's succeeding. A little bull reversal sequence. See if that ends up being a small little bounce. Now, when you get this little kind of sequence off the open, where you can see where the open started, obviously the increase in volatility, the two highest probability, well, really the highest probability scenario in my experience is you're going to end up probably with at least a temporary little descending channel forming. You get a reversal attempt out of the bulls, which of course can lead to a big giant bull push, but I think that's slightly lower probability. And what more often than not, which could mean 55% of the time happens, is you end up fading that little bull reversal attempt, and now you put in a slightly lower, I mean, we're seeing it as I'm talking about it. You end up forming a little descending channel, at least for maybe the first 30 minutes. And then it breaks, right? Because what happens right off the open is almost never going to hold all day. That is a very low probability that that happens. All right, now here comes 20,100. That's a tier 3 level. I'm not concerned with that on its own too much. Yesterday's New York session high, by the way, was 20,053.50. We closed down at 19,979.50. Okay, so let's talk about this then. The break-even point on the day here today would be just below, about 20 points below 20,000. Okay, that's the break-even point on the Nasdaq, that is. That would put us at 0%, which we know in the last 4 weeks has been kind of a problem. When we go break-even on the Nasdaq, trying to go green to red or red to green, it hovers for like an hour plus, and that just wastes a bunch of time and doesn't give us any good setups. Now, the interesting thing lately with that has been, it's also been around 20,000. Again, we're 20 points away, break even in 20K, right? Because break even point of the day is like 19,980-ish. So I gotta tell you, what I really don't want to happen here this morning is if we saw like a big dump off through both of those and continuation, I'm great with that. Totally fine. But in a range market, the fact, you know, seeing continuation, that's a big ask to make out of the market. So what I don't want to see is a test of 20K and then we bounce around, which would probably end up happening. We bounce around between 19,980 and 20K like all day. That would kill off what we're doing here. So two scenarios, either the bulls keep it above, I would say 20,050, and maybe we head back upside and form a big range up here above 20,000. Or if the bears could just break out of this trend market mentality for enough to get down through like 19,950, and then we hang out down there. All that to say, I really just don't want to hover around 20,000 all day, because that also puts us around break even, which adds another factor of indecisiveness out of the market, which we've had plenty of lately. We've had enough of that, so we don't need any more. Bigfoot, good morning. How we doing? All right, we are in 842 territory. One more 2-minute bar, and we can start looking here. Good argument, by the way, for a bit of a flat top forming. Right there, so we'll see if that holds up. Chris, really trying to learn that market inertia thing. We're looking for continuation inside the range or channel scalps with 3 or more touches, either ascending support or descending resistance. Correct. Or a very, very clear breakout of the range with really no good argument from the enemy, so to speak, the other side. So if we're bullish, the bears would have to have really no good argument, which is a discretionary call. Anyone can always come up with some kind of argument. Oh, there's this level from 6 months ago. Whatever, I'm looking at intraday stuff. I don't want the bears to have any reason to say, hey, there's this ascending resistance level here. I'm gonna get short there, because they will take confidence, both sides, from anywhere they can get it in a range market, and rightfully so. That's how you should trade a range. But yes, Chris, you kind of nailed it. That's really what we're looking for here. And by the way, the market inertia mentality, that's not how do I explain this? It's less robotic. It's more so if you understand market inertia, it helps you make better decisions as to like which setups you should take and which you should not. And those are discretionary decisions, meaning on the fly based on your experience and understanding of the current market environment, the market inertia, same thing, right? So really the best way to get better at understanding market inertia is to trade a lot of different environments, which means show up every day. Yes, and no mushy bounces or rejections in channel scalps. That starts to show signs of too high of a probability of a rollover. Tubed out, good morning, welcome back. Raj, how we doing? Yes, so 9 o'clock, expect some volatility here again. US and UK trade deal press conference is starting at 9. We'll see if it's on time. By the way, those of you guys who are, if you, it looks like it's going to be streamed, that press conference online. So if you guys have multiple tabs open, you want to drop when they take the stand. I think we'd all appreciate that. Daz, good morning. Brandon, good morning. How we doing? All right, clearly, you know, what we just talked about. We talked about this maybe 10 minutes ago. Little descending channel was a high probability of forming, and here we are kind of trying to form that. Though, arguably, we do have a bit of a flat top. You guys know how I feel about flat tops. They tend to tempt attempted breaks. Not necessarily big, huge breaks, especially in a range market, but they tend to tempt the other side. So, okay. I gotta tell you, I really hope they just announce this trade deal quick and get it over with. I can't stand when they draw it out. When they draw it out, what happens is the market just trades pretty low volatility. There's just speculation going on, bets being placed essentially. News like this is 50-50. I really appreciate when, like, Trump, Powell, they come to the stand, they just get the big stuff out of the way in like 5 minutes, and then the volatility is left to kind of die off. Traders will still be like, you know, I don't know if this is over. They'll speculate that some bomb is going to be dropped, but it fades. You want to get on the backside of that volatility of the event as quickly as possible, because if you're not trading the event, then you're not really interested in the event. All it does is it throws gas on the fire as far as intraday volatility as a whole, which is good. We want that, but I don't want to be around when they dump the gas on, if that makes sense. I'll just come back when it's still burning. So these news events are good. It's just I don't want to be around when they hit. But that's coming here in about 11 and a half minutes. So hopefully they're snappy to get to it. Here we are, still putting in a little descending channel here. Andy, what's up? New to the channel, welcome. Welcome, we've got a lot of regulars around. Hope to see you become one of them. Peter, how we doing? Melissa, good morning. Yes, Aaron, that is the 15-minute opening range breakout. But we are in a range market. We are in a range market. You look at the daily chart. So, not a bad trade. Maybe we could have gotten 30 points on that opening range breakout. But in a range market, it's not a setup I'm too cool taking on its own. You guys know what I'm after. Cameron, good morning. TP, what's going on? Benjamin, day 2 of my eval. How's it going? How you doing on the eval? That reminds me, I need to activate. Ah, shoot, I forgot. I need to activate another Apex account, 150K. That's okay, I'll do it tonight. Passed it yesterday and forgot to activate it. Sean, what big news is there today? Well, we have the US-UK trade deal press conference in 9.5 minutes. So that's what's going on here today. We had US initial jobless claims earlier, but that's over and done with. You know, so it's been maybe a week since I've checked in with you guys. How are we doing account-wise? A lot of you guys maybe it was Monday or last week that I checked in last. A lot of you guys are trading evals. How many of you guys have now taken those evals funded? I expect it's probably a good amount of you. Clinton is funded. And by the way, if you blew some evals, don't be embarrassed. It's okay. Okay, just set up your business model. Figure out, okay, well, what percentage of my evals do I need to pass to make these numbers work well? Then you determine how large you're trading in the funded accounts, right? Veritas funded. Chris sitting on 5 funded accounts, 4 more evals going right now. Ninja trading 1 funded and some evals. Scrumptious 1 funded, 1 eval, chasing the payout. Jeff still working the evals, cool man. Mio funded. Debo should have 2 50K evals funded today, $500 away. Well, take it easy and get to the finish line. Zach, 2 funded, 5 evals, almost there on them. Been break even since Friday. It's okay, break even. I've commonly said in the past, if you're break even, you're 80% of the way there. Because you're already technically gross profitable if you're covering commissions and slippage. So you're doing something right. Raul blew a few evals, still trying to get funded. It's okay, you'll get there. You'll get there. Take it easy, follow the process, take good trades. And by the way, part of your first few evals is figuring out, well, how aggressive do I want to trade in my evals compared to my funded accounts? Like, part of it's figuring that out. So a lot of people, they blow their first eval ever and they're like, I suck at this. Like, if you start running some numbers, you'll start to realize that the evals are in comparison to the payouts you'll end up taking, they're oftentimes going to be quite inexpensive. Don't trip over a blown eval. It's not a big deal. A learning experience, if anything. Especially with the Apex evals, they're so inexpensive. I mean, whatever lesson you learn from each blown eval with Apex, I mean, especially if you get them on sale, they're like $16, $30, $50. Compared to what you're shooting for here, I mean, to get a lesson for under $50 is a hell of a deal. Cisco, how about 150 blown evals? Well, it would totally depend on the payout structure you've been looking at. But I gotta tell you, I know plenty of traders who have blown thousands of evals. But it fits in their business model. So it's just their expense sheet. They're like, yeah, I've blown this amount, but like, it was part of the plan the whole time. Write out your business model. If you haven't done it yet, you've been listening for any longer than a week, take a pad of paper right now, write down, okay, how much am I willing to invest in this per month or per quarter, or per year, per week, whatever? What kind of ROI would make sense for me to spend my time doing this? And then figure out how big should I trade in the funded accounts that equals an average hold time for the funded accounts before, on average, you hit that statistical drawdown that's going to come, okay, that causes you to blow the funded account. You should understand on average how long you're going to hold a funded account, which then tells you, it helps you figure out, okay, well, on average then, what is each account worth to me on average as far as payouts? How much do I spend on average to get an account? Eval costs, activation fees. Oh look, my ROI is X. Beautiful, business model works. If you're not doing that, you're doing something wrong. Takes 3 minutes to figure out, just do it. And you can make adjustments later. All right, so we've got Trump here in 4 minutes. Kings, I screwed up for today already. Started trading MNQ since 8 a.m. Eastern, all the way up through 15-minute open. Had direction right, but wrong entry or stop. Well, you know, Kings, there's a lot of times that I have the direction right, but the timing's off. The timing's off, you're just wrong. It's the reality. However, that's not the reality if you're trading with too tight of stops. If you're trading with 5-point stops on the Nasdaq, you're getting chopped out. You're not even giving yourself an opportunity to be right. Costa, 300K challenge, still working on it. Currently up 7.8K with the 20K goal. Cool, good work. Aaron says, Nico, I've only got $500 in drawdown left on my funded account. You think I should just restart? No, don't throw it away for no reason. Just mess with, I assume you're using a copy trader. Mess with the settings and size down in that account. The only reason, by the way, that it would make sense to throw away an account where you're like, the drawdown's so close, I can't even really trade the right size. Aaron, the only reason that you would throw that away is if you're already maxed out the accounts at the prop that you're trading, and there's opportunity cost involved with not just throwing it away and getting funded quickly again, which would probably make the most sense with like Apex when you can get funded in 1 day. That's the only time that I think that would make sense, to just throw away an account that isn't blown. Or if you're like, well, I have a bunch of 25K accounts, for example, and you're like, I'm moving up to the 150s, I've squeezed these 25Ks. They're plenty profitable. I'm just going to get rid of them and go. That would also make sense. All right, but don't throw it away for no reason. It's an asset. Unless it's taking up space, just size down. Let the copy trader take care of it. Mr. V, Yoniko, how about making a video breaking down a sample business plan? Good idea. Good idea. I'll add it to the list. All right, we are 45 seconds out here from the supposed start of the US-UK trade deal press conference. That we're going to get some volatility out of this, okay? So, yeah, we got to kind of got to let that come and go. All right, it's 9 o'clock. It's 9 o'clock, so any of you guys who have that stream pulled up of the press conference with Trump, let us know when he takes the stand, please. And I will announce any headlines if and when they come in. Dan, do you take your time with evals or try to pass them in one shot? Personally now, I trade them very aggressively. Well, let me clarify this. The regular accounts, like with trailing drawdown, the regular Apex accounts, like the 50Ks, 150Ks, whatever. The first trade that I take is very aggressive, and then I slowly size down until I hit target. So I'm just taking the most risk on the first trade. I still try to take a good quality trade, but I take the most risk on the first trade so that if I fail it, it doesn't take up too much of my time, because it's really important to understand my number one concern with evals is opportunity cost. I don't want to spend too much mental capital on the eval. Okay, now with static drawdown, the accounts that the drawdown doesn't move, I do the opposite. I trade small in the beginning and then I size up toward the end. Well, we are just sitting and waiting for Trump to rip off the Band-Aid so we can get to work. Come on, man, we're on the clock. But I suppose to add on top of the eval conversation, I can only tell you my truth, and I'm not going to tell you what to do because I wouldn't listen if I were sitting there listening to someone I don't know telling me what to do, and I'm not into that. So I can only tell you what I do. The reality is, in the beginning, before somebody has proof of concept, before somebody's like, okay, well, I've taken more payouts than I've spent. I've taken a lot more payouts than I've spent. Before you have that, I do think you should get the lesson for as cheap as possible, which is in the eval. Okay, now that's not like okay, like go sit in the eval, little guy kind of thing. That's not that conversation. That's, hey, I'm being smart. I'm getting the lesson for like $50 or $30 or $15. Whatever you got the eval for, and you're getting it cheap because you're taking your time and figuring out how you're going to trade in the funded account. But once you have proof of concept and the business model is set, now there's opportunity cost. Now spending a week in the eval is costing you money. So that's the way that I look at this. That's my truth. Come on, Trump. We got work to do. Oh, Bruce, don't tell me that. Trump's scheduled for 10:30 now, according to Fox. Goodness. Doesn't he know there's traders sitting here waiting to get to work? Well, I suppose if that's true, we'll see if he takes a stand here in the next, like, 5 minutes. If not, then it turns out Fox may end up being right. Then I am interested in actually, we could put on a setup before. In that little window if we get something. Forming nice little channels here, I gotta tell you. All right, now this looks very clean, right? However, it's better than it could be. My one complaint is we've had this conversation a lot, and I'm not sure if people really understand what if some people really understand what I mean when I talk about this. When you form a channel with like back-to-back bars, and the back-to-back bars are making up the entire channel, like rather than a multi-bar move in each aspect of the channel, it's like one bar, one bar, one bar, one bar. It makes it a lot tougher and lower probability to trade the thing. And we're kind of seeing like a 60% that case here mixed in with a clean move here and there. So this test here for me is really important. If we can get a nice clean push upside, because this is now a multi-bar retest, and then we get another retest, I would absolutely put that on. I think you're right. I think Trump's in the back on his Robinhood account. Andy, hey, so I'm kind of new into trading. Cool. Do you have some strategy link or a video where I can learn a thing or two? Yeah, I'll be coming out with more, but I'll be coming out with more traditional, like, educational stuff on what I actually do. But I've always been the kind of guy who, like, that kind of stuff is great, but putting into practice is really what matters. So actually watching someone do the thing is very underrepresented on YouTube. It's a lot of, hey, let's talk about the thing rather than doing the thing. So I prefer to just do the thing and then show you me doing the thing and maybe explain while I'm doing it, because I think that's what would help me the most. So I have a lot of that stuff already here. I've only been doing the stream for really 6 weeks. But if you want to learn through watching somebody do the thing, I have lots of videos, lots of streams. There's a 3-hour video of me just taking trades. That's probably the best way to do it. Or just show up here every day. But that 3-hour video is probably a good watch too. Just a whole bunch of trades. Winners and losers. Alright, well, that channel just busted up here. Now, any hope of a descending support here is very aggressive. Here's where I'm looking, right? So let's look at this. We have 42 seconds left on this bar. Okay, now yesterday's New York session high was 20,053. That's really the last thing standing. Alright, I'm interested here. Ugly, big wick back upside. For me to enter this continuation, I would have had to see that close at the low of the bar. Okay, you guys see this here. We closed inside of this wick, and we wicked back up, which at the last second, within the last 15 seconds, which tells us what? Well, the bulls stepped in, and we're making a, they were winning. It's a red bar, but the bulls won the last 15, 30 seconds of that bar, right? So, the most real-time updated information on, well, what's the relationship between the buyers and sellers was not good enough for me to sell that rollover for continuation. Nico, what's a good trade copier? I'm using a free copier and it always slaps on extra cells. Extra cells and buys on the copied account. That's a problem. It's a big problem. I don't have any affiliation with any trade copier, but I do use the one from Affordable Indicators, which has been great. It doesn't fix the common problem from NinjaTrader, which is ghost. Hold up here. Kind of coming into a little descending. I'm gonna give this 30 seconds. $15 more seconds. Yeah, we're gonna get a push. That's a tough trade to take. That's a very tough trade to take with Trump getting ready to step out and coming into... Here, let me show you. Let me show you my exact thought process there. So, I know that the bulls are looking at this. Okay, but they could draw it a little differently. You might have some bulls drawing it like this, which all of a sudden could cause a little bit of an issue. You could have people maybe even argue drawing it a little bit more aggressively, like people might be looking at kind of like this kind of thing, just off that recent wick, but that would obviously be in hindsight. And with Trump getting ready to step out, that's a tough trade to put on. I mean, not to mention, you're right below yesterday's New York session high at 20,053, right below there on the rollover, and then coming right into 20K which also right at 19,979 is the break-even point on the day. Could I have put that trade on? Yeah, if I had put that trade on, I'd forgive myself for doing so, but gotta make the best decision I can in the moment. Well, anyway, before we got sidetracked there with that setup, yes, I use the Affordable Indicators copier, and it has been very good to me. It's not without its issues. NinjaTrader has issues that it carries over into any copy trader. But as long as you're keeping an eye on it, it's been pretty good. Jim, good morning from Nashville. Good morning. How we doing? Mario, good morning. John, with the Affordable Indicators copy trader, what is your method when you say I have to flatten after a trade? What are you looking at and doing? Well, I am looking at all these accounts, and right in the, well, right, I think to the left. Yeah, to the left of the size column will pop up X's. And then at the bottom, you have an X for all of them. So I'm exiting out. But what it's really doing, John, is I'm not, most of the time when I say, hey, I gotta flatten, that's, I don't mean that really literally. What I mean is, though I'm not gonna explain this every time, NinjaTrader has a very common problem that passes over to any copier you use called ghost positions. And when you fill, sometimes, and it happens a lot since I'm running, many accounts, 1 or 2 or 3 of the accounts sometimes will display, hey, there's still a position, but there's really not. So let's say I'm long. Let's say 4 contracts in the account, whatever. When I get hit out, I no longer have those, but NinjaTrader says I do. However, I'm never really sure if I actually still hold them or not. So what I am in the habit of doing is I just flatten twice and I'm done. And sometimes you actually will be holding the contract, so I don't like to take that risk and like restart NinjaTrader every time. So when you flatten, if it says you have a position but you really don't, what it actually does is it flips you the opposite way for a split second, and then I flatten that position. So that's really what I'm doing. So I'm paying extra commissions because NinjaTrader can't get their shit together. But whatever, it's part of the game. It's part of using a copy trader with NinjaTrader. But someday that problem will be fixed because NinjaTrader has to know about it and know that everybody using their platform, a lot of people, are trading many accounts. Pumple, you are exactly right. Kings, Nico, I finally removed all my indicators from my screen. Next is all these lines all over the place. Yes, respect your charts, keep them clean. No indicator, aside from raw data, like range, like you're seeing right now at the bottom, is worth having up when it confuses you. I have the 20 EMA, that's it. I put it on there for context, that's it. And then I display the range with the average range, just comparing the current volatility with the volatility of the last 20 minutes. That's it. When you start looking at your charts and things are contradicting each other, you've gone too far. Clean up your charts. Respect yourself. Well, Fear and Greed Index just came in. Not that that helps us too much, but that is sitting at 58 out of 100, which is greed. Not too long ago, that was at like, what, 10? 9? Extreme Fear, not too long ago. Josh, Nico, I'm inclined to use more contracts with a smaller target. Advice on finding the right balance? I trade a personal account. Yeah, so with too small of a target, well, let's talk about this. With too small of a stop, you end up getting chopped out. You don't give yourself the opportunity to be right. But when you start going too tight, even if you're avoiding the chop most of the time, what happens is you're getting the same amount of money, but your expenses go up because now you have to pay more commissions, right? And usually the trades will take less time when you get tighter. So it's not uncommon to start taking more trades. So you have to understand, okay, my expenses go up when I trade tighter and more per day with more contracts, right? So that's a balancing act. Do the calculation, figure out, all right, what's my expense per trade now that I'm trading more contracts tighter? And does the edge that I think I have cover that? If the answer is yes, then you're good. A lot of people go too big and too tight because they're like, I'm a scalper, I'm going to trade with 2-point stops. You're going to get chopped every single time, essentially. Your entry timing would have to be literally perfect. And we're not capable of being that perfect. No algorithm is either, by the way. All right, now we are testing the little descending resistance here. This is clearly becoming a potential area to watch. I would draw it like that. Don't overthink it. But we got Trump coming out supposedly in 7.5 minutes. Hopefully we get some checks in the mail. We're on the clock, man. We're getting delayed. If you guys haven't yet, please. Helps out a lot if you just press like or dislike on the stream. Appreciate you doing so. All right, there's a push. There is a push. Is Trump out yet? He's scheduled for 9:30. Hopefully he comes out maybe a little early. I doubt it. Here we go. Headline: U.S. to cut tariffs on UK-made cars to 10%. That's coming from Telegraph. But no Trump yet, but we are getting a headline here or there. CNN reporting US-UK. When did this come out? Yeah, CNN reporting US-UK trade pact will leave the 10% US tariff in place. But still no Trump. Yeah, and that CNN headline is old. That's a couple hours old now. But the UK-made car headline is just right now. Trump to cut tariffs on Range Rovers and deal with UK. Come on, let's get the real headlines going. I mean, you guys see, this really is becoming a clean little descending resistance, but we have a, you look at the 5 minute as well. Let's pull up the 5 minute. There's the 5 minute. Somewhat aligning, right? At least you have the 20 EMA on the 5 minute, which is a little bit more relevant on the 5 just because people watch it. Kind of as a secondary potential backstop, which helps the setup. I'm not too worried about this 20 on the 2 being in the way. But with Trump coming out in 2.5 minutes, that's a tall order, man. Pumple, do you take the 2 minute 20 EMA into consideration? I feel like it rarely gets respected. No, you're right. It a lot of times when the 20 EMA and the 2 gets respected, a lot of times it is a coincidence. Sometimes it's not, but think about what's going on, really. The 2 minute chart is not even close to as common as the 5 minute chart. And a lot of people who run the 5 minute chart, which is like almost everybody, at least off to the side, is going to throw out maybe a 20 EMA on there. So it becomes a self-fulfilling prophecy. But I have it on the 2-minute, which is what you're currently looking at, a 2-minute chart, just for context, to kind of understand literally what is the exponential moving average of the last 20 2-minute bars. So as far as taking trades off the 20 EMA on the 2, I think that's a very weak idea. You would have a little more argument on the 5-minute, but even the 5-minute, I don't think it, in and of itself, is strong enough to just start taking trades off of. All right, Trump scheduled now here for 40 seconds out. Let's get him out, rip off the Band-Aid, and get to work. Wonder Monkeys. Hey, just found your channel. Cool to see someone who shows the losses and wins live. Are there any videos where you go over your methods in more detail? I have a lot of content, so I've been running the stream only for 6 weeks. But I have a lot of content of me doing the thing, if you want to take a look at that. And then I'll have more videos coming out soon of more education-based. But I do a lot of explaining in a lot of the videos. So, good to have you. We got a lot of regulars that show up every day. Hope to see you become one of them. All right. Trump is scheduled here. He is 45 seconds late. So, I think we'll all be getting some checks in the mail here, leaving us on the clock like this. Doesn't he know we've got work to do? Yeah, Pumple, once he rips off the Band-Aid, I'm cool to trade. I don't care if he's still talking as long as he's not dropping bombs. Well, here's the test of that trend line. In another life, I'd be interested, but not with Trump getting ready to talk. We're testing the 5-minute 20 EMA, by the way. That is currently sitting, again, by the way, more psychologically relevant than anything on the 2-minute. That 20 EMA on the 5 is at 20,111-ish, 112-ish. I know some bears are going to try to step ahead of that. We'll see if they can. Well, now's about as good a time as any. If I'm on the clock, I guess I'm getting coffee while Trump takes his time getting out here. If he takes the stand, yell in the chat. You understand? I'll be back in a couple minutes. All right. Well, it seems that Trump is keeping us on ice. Not ripping off the Band-Aid yet, but he is live. Is that right? I can't pull up his stream while I'm on stream, but I got headlines coming through when they come through. Lee, good morning, Nico in chat. Stop by to say hey in between meetings. I did put a screenshot up of one of the indicators I'm working on in the Discord. Should be finished by this weekend. Cool, brother. Cool. Yeah, guys, the Discord completely free. You can join, come hang out. The link for that is in the description, by the way. It's just free. I don't charge for the Discord, not these days. But Lee is building out some custom tools for you guys to use for free. Debo, the only people watching these press conferences live at 10 a.m. Yeah, right. 10 a.m. on a Thursday. Who's watching Trump talk about tariffs? It's pretty much only us. Well, we might as well make some adjustments here, huh? This level needs to be adjusted. It's getting dangerously close to kind of a flat top, but I'll leave that, I suppose. All right, now keep in mind, yesterday's New York session high was 20,053.50, which we're pretty much at. Yeah, Kevin, that you're probably correct. I'm just throwing them up there for context. But we are holding off until Trump rips off the Band-Aid. I gotta tell you, I mean, what is it with president? It's every president. I mean, what is it with presidents? Like, Powell shows up on time most of the time. And if we're being honest, I know everyone likes to blame every president for everything, but like, they're one person. I mean, they can only do so many things in a day. Like, it's not like the president is, I would argue that there's a hell of a lot of CEOs that are way more busy than any president. So it's like, if you say you're gonna be somewhere, and this is every president. Every president does this. It's like when they swear in, you're like, you have to be 45 minutes late to every event. Yeah, of course they're busy. I'm just saying, this is part of their day, so be there on time. Yeah, well, I think people like to think that. Now, I'm not taking this away, obviously. You know, Trump works long, long days. However, I don't know if the average president is as busy as everyone likes to kind of think. A lot of people think of them as like a superhero who just works 24/7. Obviously, that's not the truth. Yeah, Pumple with Tradeify. Well, one second. It depends which Tradeify you're talking. You left out the E, so I assume you mean the platform. I link in my Take Profit Trader Tradeify accounts to NinjaTrader with Tradeify. I haven't used the actual Tradeify platform for trading, but I link it into Ninja. My observation with the Tradeify accounts with Take Profit Trader versus Rhythmic, for example, for context, is Rhythmic seems to be the professional option. It seems to be slightly quicker, but I gotta tell you, in my experience, Tradeify is... I'm sorry, Rhythmic is like, it seems to have a few more issues here and there. Tradeify is like the plug and play, still good enough, not too noticeably slow, but it seems to have less problems. But yeah, Pumple, if you're talking Tradeify, the prop firm, that is my next stop. At least that's the plan right now. We'll see. Wait, I'm sorry. With Take Profit Trader, what am I saying? Tradeivate I'm talking about. Yes, Tradeify with an E is probably my next stop. As far as the third prop I'll be adding here. But right now, Take Profit Trader and Apex are working very well together. The beauty of Tradeify, God, all these names, they get jumbled. They're all the same. The beauty of Tradeify with an E as a prop firm is they have those straight to funded accounts, which if you run the numbers on, which I have done, depending on your pass rate on those bigger account tests, it can actually make sense to just go, if the business model already works, it can actually make sense to go straight to funded at Tradeify, which is cool. All right, headline from Trump. Tremendous deal for both nations. This is a very special day. I just concluded a rare earth deal with Ukraine, speaking with Zelensky soon. Trump says, I reached a breakthrough deal with the UK. All right, let's rip off this Band-Aid here. The UK is one of our most cherished allies. Just get this out of the way here. Trump says the US-UK deal increases market access for US exports, increases access for US beef and ethanol, and will reduce non-tariff barriers. All right, Pump, rip off the Band-Aid. Let's get through this so we can get to work. The UK will fast-track US goods through customs. Things will move quick both ways. He says the final details will be written up in the coming weeks. Well, do we have any final details? For the big headline that the market's waiting on here? Alright, there's a push downside, taking out the intraday lows. Good volatility. Get it out of the way. Trump says we will receive new market access for US chemicals and machinery. Kings, no, I do not. Doesn't mean they're wrong, by the way. I just prefer what I use. Trump says we have many meetings planned. Every nation wants a deal, of course. He says U.S. Treasury Secretary's meeting with China will be interesting. Man, this whole speech is kind of a letdown, huh, as far as the market is concerned? It's one of those things where you have to wait for, so you kind of like, okay, let's rip the Band-Aid off, make some moves. And then when the moves don't really come, we're getting some volatility here, but when the moves don't really come, it's like, we waited all morning to let this pass. Here we go. Get some good volatility, a good push downside here. Let this get out of the way. By the way, 20K, that's going to be an S tier level, so watching 20K, by the way, we are right now in between exactly what we talked about at the beginning of the stream that I didn't really want to see us end up stuck between, which is 20K and the break-even point on the day, which is at 19,970-ish? 19,960-ish? There's like a 40-point range between 19,960-ish and 20K that I don't want to get stuck in, because those two are big levels. The break-even point on the Nasdaq on the day and 20K. So if we can pick one way or the other, that would be beautiful. Trump says the US and UK will work together on steel. The deal includes plans to bring the UK into an economic security alignment with the US. All right, market kind of retesting that little flat bottom we had formed a little bit earlier. The headlines seem to be slowing down. Now, by the way, if you're trading right now, please have live risk management out. Now is not the time to trade naked. Yeah, Chris, you sicko. All right, volatility seems to be trying to return to normal. The headlines are slowing, which is good. We might see one or two extra here that come through with added volatility, but we wanted to get over that hump of Trump talking. They delayed us. But hopefully we're getting over that. There's some volatility there. Just got to work it out when you have these events. You know, this here, when the whole market's watching one event, and the person driving the event is a human being who can make their own decisions and maybe word things the right way or the wrong way. It's just, that's completely out of our control, and it's so, I don't even want to say the word difficult. It's arguably not worth at all trying to trade something when it's that out of your control, when it's that 50-50. You just have to wait until the actual edge is a possibility again, like when the trading is normal. So we gotta let this pass, which seems to be occurring here. Again, those headlines are slowing. All right, New York Fed. April 3-year ahead expected inflation is 3.2% versus March's 3%. Also from the New York Fed, April 5-year ahead expected inflation 2.7% versus March's 2.9%. Current and expected views on financial situation deteriorated sharply. That's from the New York Fed, not Trump, that's from the New York Fed. And also from the New York Fed, 3-year ahead expected inflation highest since July 2022. This is good. Let these come through, let the market digest them quickly. April labor market, income, and earnings expectations all declined from the New York Fed. Very negative. And April projected year-ahead rise in home prices is at 3.3% versus March's 3%. Okay, this is good. These are all the headlines that we need to just get out of the way. The 10 a.m. rollover just happened, so that's out of the way. Good, clean this up. The Trump headlines are slowing. The volatility's kind of coming back into normal a little bit. We can always see a tariff. Yeah, Rufio, I agree. I think it's been... There's plenty of evidence to me to suggest that if someone is trading news without any additional information, it's essentially a 50-50 toss-up because the market is so efficient at pricing things. But that's only on the news, right? In regular trading, you can get those 55-60% probability occurrences, assuming a 1-to-1 reward to risk. Obviously, you can make those numbers work a million different ways, but I just use 1-to-1 as a baseline to show the probabilities in a simple manner. All right, so I think... I'm not Trump, obviously, but I think we're pretty much free and clear here to find a couple of setups going. And do as we please now. Hopefully that's kind of out of the way. U.S. Commerce Secretary says our 10% tariff stays on. Now, hopefully they wouldn't drop a bomb this late in the conversation, but I say this late because usually we get it in the first few minutes. But of course they could, so live stop orders, important. The UK deal, this is from U.S. Commerce Secretary. The UK deal opens access to U.S. agricultural products and machinery, which is obviously kind of meaningless to the market, at least volatility-wise. All right, we're at 20,000. All right, now, updated thoughts here. We're still getting a few headlines here from this conversation about US and UK trade deal. So we're considering, hey, we might see a random tariff headline that moves things, fine. We'll keep an eye out for that. But now, really, I'm shifting my focus a little bit more to this 20K and break-even point on the day. Really this kind of 40-point range between 19,960-ish and 20K. That's the primary focus right now. Look at this little back and forth. Bumble, this is the desktop version. All right, we got a flat top forming there, with a little bit of a potential ascending support. So there's the attempted push through the flat top. Good. If we can see this turn into a bit of an ascending channel, then we got something to do here. All right, good. So now we were getting a push up out of that little sideways range, which is great. That opens things up for us a little bit. Now, let's do a little bit of work here. So let's clean this up. Now, clearly, what are the bears looking at, right? Well, obviously, every bear on the planet would probably draw that right now. So let's see if that becomes a thing. And I'd probably draw like that. All right, now there is the test. So let's see if the bears, I'm sure the bears are going to at least try to step in and see that. We're in a range market, so most of the time you're going to see the opposite side step in at those really obvious levels. But I got to tell you, what I would really prefer, I would love if we can get a push through here with a bull sequence and a close above the 20 EMA on the 5-minute chart. So close really at like 20,080. Or above on probably the next bar. So we're now at the point in the day where we're always like 2 minutes out from a potential trade, which is good. Benjamin, caught that entire downside push by accident. Internet went out, so I walked up the street and flattened at 240 3/4 points. Damn, it's a nice surprise. All right, you can see the bears are stepping in. They're kind of seeing that level. Let's see if the bulls can push us through. All right, we are getting that now. Primary focus here is that 20 EMA on the 5-minute, which we need to clear for me to take any kind of continuation. And getting a close above 20,080 is also necessary, not only for that 5-minute 20 EMA to clear, and any psychology out of the bears there to kind of be put to rest. but also that would turn this 2-minute bar into a growing bull bar, whereas currently we have shrinking bull bodies, which I also can't have. So a minute 10 out from the close of this 2-minute bar, and we are making a test of the 5-minute 20 EMA right now. So let's see if we can clean that up. Give me an entry here. The bears are stepping in right ahead of that 20 on the 5. 35 seconds on this 2-minute bar. Again, to buy the rollover here, I would need to see a close above 20,080. 24 seconds. All right, there's the rollover. Same idea applies on this next bar. I would need to see it be a growing bull bar, because right now we're seeing shrinking bull bars, shrinking bull bodies, really. Which tells me that the bears are trying to step in ahead of that 20 EMA on the 5. I want to lay that idea to rest and have the bears feeling just horrible about themselves on an entry. So again, I would need to see it close at this point, probably up toward 20,085, if not a little bit higher. All right, here's the retest of that trend line. Very common to see that, by the way. When you see a breakthrough, oftentimes in a range market like this, you will see a retest. And that retest, for those wondering, that retest is pretty much 50-50, which is why I don't trade it. I wait for continuation to present itself. All right. Well, we're getting a little bit of a push here. There's the rollover. All right, good. Same idea now applies here. Let's get a nice clean close. We got a minute and 55 seconds until the rollover of this 2-minute bar. If we can get a nice clean close at or very near the high of this 2-minute bar in a minute and 48 seconds without it becoming too outsized. Meaning if it pushes like way up above 20,100, all of a sudden it's like, well, did news hit or something? So a clean close at or near the high of this bar, and I will buy the rollover. Got a minute and 25 seconds. All right, 60 seconds out here. Still well within the range, by the way, on the day. I mean, this is a better look at it, really. All right, 32 seconds. Let's get everything armed up and ready to go. All right, bulls, calm down. Calm down. Give me a nice close below 20,100, but at the high of the bar. Don't wick back. 15 seconds out. Come on, Bears. Don't wick us back now. All right, we got... Damn. Damn. There's the rollover. Ugly, ugly, ugly. You see those Bears step in? Can't take that. That would be a rule break. Those Bears stepped in the last 15 seconds. Wicked us way back downside. So, same idea here. Same idea on this bar. Now again, 20,000, we talked about this level earlier. 20,100, that is a tier 3 level, so I'm not concerned with it on its own. So, you know, it's like, well, if it did give me a continuation setup right into that, would I take it? I would. I would. If it rejects, fine. But being what it is, I'm not going to let 20,001 stop me. All right, we got a minute and 8 seconds until the rollover here of this 2-minute bar. If we can get a nice close above that previous bar's wick high, as well as at or very near the high of the current 2-minute bar, then that is a rollover buy setup for me. $40 seconds. Got to see close above 94. $30 seconds. Again, close above 94 is what I need. $12 seconds here. I'm locked and loaded, ready to go. Come on, Bulls, push us up, push us up. Closing inside of the previous bar wick. Can't put it on, can't do it. Those Bears are stepping in. They're saying, hey, you know what? This is a range market. I don't know. I'm gonna short that. I need the Bears saying, you know what, Bulls, you can have this one. Let's cover. All right, minute 20 out on this bar. Again, same idea applies. Yep, we're coming into volume weighted average price. I'm okay with that. A good continuation setup for me trumps view up, even if it does reject. I'm fine putting it on. $52 seconds. Also, by the way, stop hunting mentality at high of day. 30 seconds out. All right, let's see if we can get a nice close up toward 100. And I can't see a big wick on the bar, especially not below the previous bar wick. The Bears are wicking us down. The Bears are keeping those wicks large. Doesn't a 2-minute chart timed 15 seconds earlier or later change all your entries? Well, it would change a lot of them, yeah. Yeah, the bar rollover is relatively arbitrary. Which is fine, by the way. Except for the fact that it's not, because the minutes are the same on a 1-minute chart. You know what I mean? The rollovers are going to be kind of different sometimes on a 5 minute, a 3 minute. But a 2 minute rollover will always be a rollover on a 1 minute chart. Of course. There's a big giant push. News headline. Ah, that blows the setup out of the water. This tariff market, man, these random headlines. This is why you got to be running live stops. Again, I wasn't in a trade. I'm not in a trade, but I'm looking to put on a trade. And that big outsized news bar kind of shoots me in the foot as far as this setup is concerned. Trump says we will have discussions on films. I'll be going to Scotland later in the year. I intend to make a deal with Europe. That was a few minutes ago. Trump asked if China tariff can be lowered. He said it could be. Likely the headline that caused that move. All right, now, after that big bar, it's like, well, is the setup still in play? Yeah, it could be. I gotta see how this bar develops. I would never enter on a news bar itself like that, but once the market has 30 to 60 seconds to clear out the news, which is obviously inside of a 2-minute bar, the market digests news fast, especially today. We got 60 seconds until the close of this 2-minute bar. Now, obviously, we've broken the high of day now, so that stop hunting mentality has kind of been shot. Well, actually, no. We're right at it, essentially, okay? So, a push above would be essentially a break. That's fine. 35 seconds. And off the open, that initial, we got that big 5-minute bar off the open, that push, that's kind of another high. Okay, so we pushed. All right, let's see if we get a nice little setup here. This looks crazy, but this is well within my parameters. All right, I'll get long there on the rollover. They're like, you're getting long on that push. Yep, I am. That's a setup for me. So I'm sitting long here. Average price 20,141. 20,101 is the stop. 20,181 is the current take profit. That's how the ratio currently sits. And we are a couple points in the money. Five points in the green. $10 points in the green. $15 points in the money. Again, target's at 20,181, which with the ATR currently at 30, I'm going to leave. All right, we are 21 points now in the green. Gotta see a push up toward 181, see if we can get that. These little pullbacks along the way are not unexpected, by the way. Bears are going to try to hold on to, well, wait, it's a range market. It is a range market, but we're getting news now making a push. All right, 22 points in the green. Oh, wow, what a beauty of a rollover on that 2-minute bar, huh? That really was a beautiful rollover. So let's see if we can get some bull continuation off of that rollover. Or if the Bears end up trying to pull us back a little bit here. Still sitting 25 points in the green. Yeah, Chris, so you're starting to kind of push even harder, but that would have been an entry for me as well. I mean, that really was a beautiful close on that bar. Here's the look. So we're currently sitting. See if we can get a push up toward 81. All right, coming into 20,170. Again, targets at, oh, let me move this up here. All right, there's a push. Couple points from target. Give me a push up through 80. Couple points out. No reason to manage early. It's an emotional call. Just got to see a push up to target. We're close, hesitating. There we go. We are out there. Goodness. Goodness, goodness, goodness. Hold up here. Having take profit issues. 1 second. 1 sec. We gotta... Come on, take profit. There we are. Beautiful. All right, sorry guys, I had a take profit problem. But perfect, we are all set. We are flat. So what happened there is my take profit trader disconnected on the profit take, which is a trade evade issue. Okay, so we're good. I got it reconnected. We are now set. Copy traders unarmed. And we are flat, so gotta make sure. Okay, that's how we sit on that one trade. Now we're up 3,500 bucks, and you can see the accounts. So the take profits come around. So good trade. Good trade. Did pretty well on that one. So that's how we currently sit. Now again, I'm still watching here. But we'll see what we can grab. Now, listen, this is a big, this is a big mistake that a lot of traders make here. You guys saw my entry. I think it was this bar, right? A lot of traders will say, Yeah, but we've made such a big green move. That's not how futures really work. So if you have to look at the balance between buyers and sellers, like people will buy a 3% red day just because it's down 3%. You have to have more than that because we recently in the last 6 weeks saw 7% days, 8% days. Right, so buying continuation like that, I know a lot of you guys are like, that's crazy, but it was a perfect setup for me. Well, not perfect. It was a beautiful setup. Perfect really requires a lot. It was a beautiful setup. I got to put it on. That's being disciplined, guys. Being disciplined doesn't just mean cutting your losers. It means when the trade is in front of you, you put it on, regardless of how you feel. Okay, now if there comes a point where you're like, well, I'm putting these on regardless of how I feel, but when this happens, it turns into a loser and I lose my edge. Well, then adjust your rules. But when your rules are what they are, if there's a trade and there's a part of you that's like, yeah, but I don't, but like, it's so high. Is it a good setup? Yeah, it's a good setup, but it's so high, it just feels wrong. Doesn't matter. Discipline means putting it on anyway. So let's keep looking here and see what else we get. Trump says we won't do a similar deal with cars. We're getting some nice volatility now. This is a nice refresh after the last week, huh? 31 ATR at 1030. That's good to see. That ATR, by the way, is that average true range. All right, 20,002 tier 3 level. Again, not worried about it. But we're now seeing a lot of back and forth wick volatility. So this setup has now become less clean than it was when we entered. But I mean, goodness, guys, look at this. Look at this. That's always nice to see. When you're 25 points in the money on a trade with a 40-point profit, and you see an even more pretty setup that you would have entered on than the one you did enter on, that's a very good feeling. Again, we entered on the rollover here, and then we got, oh, what a clean close on that bull bar. Then push to target. Gotta tell you though, when take profit trade or trade evade, I haven't had that happen very much. When it disconnects while you're still in a trade, a little scary. But we got it cleaned up. Zach, 13 bucks away from passing third eval. Cool, brother. Good work. Take it easy. Just get over the finish line and get funded. Now, which, by the way, you guys saw, I'm trading both Apex PA accounts funded and Take Profit Pro accounts. I think mixing is a great way to go. Take Profit Trader, you get those daily payouts. It's such a great setup. Every Take Profit Pro account is such an asset to have, really. Those daily payouts are so nice. But Apex is, Take Profit maxes you out at 5 accounts. That's the reality. So, Apex, you can go to 20. Which, by the way, Apex, as of maybe 36, 48 hours ago, they are 80% off single day pass. You can pass in 1 day with code BIG. But if you're more into the daily payouts, Take Profit Trader is 30% off, no activation fee. which is a big deal. The no activation fee is a big deal at take profit. Same code BIG. All right, again, we're still at 20,002, tier 3 level, like we talked about. Not too concerned with that on its own. Look at this, though. I mean, goodness, this 5-minute chart, quite the push out of the hole, huh? There's the more zoomed out 2-minute look. What a beauty. All right, John says, am I thinking about it the right way? This is a very smart question, by the way. John says, am I thinking about it the right way with my affordable indicators set to orders rather than executions? So if my internet goes out or lose connection, the orders are out there and would stop me out or take profit. Yeah, John, you're thinking about it the right way. However, there's a problem with the orders setting. The problem is that the more accounts you get, the more likely it is that you end up with partial fills. Right? Because if you're using limit orders to enter, you might get full fills on half the accounts. You might get 1 contract or 2 out of 5 and the other 10 accounts or whatever. And it's like, it's just a nightmare when you get partial fills across all the accounts. It's an absolute nightmare. I use executions. The ideal scenario, I think, would be to use executions or market orders as the same thing on the follower accounts, and then just have a really reliable internet. I think that's the best setup. Is it foolproof? Is it perfect? No. But the things that are imperfect about it are kind of out of your control. Big, why don't you do Power Hour? Yeah, maybe we will do Power Hour show at some point. But not right now. All right, Josh, hope you had a good one, brother. All right, so still watching here. By the way, what we've been seeing a lot since, this looks like a trend, which I would call this an intraday trend, but that doesn't change the fact that the market right now is kind of in a range-bound inertia environment. So eventually here on this move upside, as the headlines from Trump fizzle out, the bears are going to step in and try to at least flatten out this move, at least a little. So if we end up in a channel here, I would say forming a channel here in the next 10 minutes, well, the next half hour, let's say, is highly probable that we end up forming a channel. Whether it's flat, descending, ascending, I don't care. But after a move like that, that's really likely. Yes, Michael, you're correct on the take profit trader question. All right, well, that was a nice little close, but we're getting a lot of shrinking bull bodies. So, you know what? Had I entered on that rollover, and I'm not just saying this because we're getting a push, but had I entered on this rollover, I wouldn't be mad at myself about it. But all these shrinking little, you see this? All these shrinking little bull bodies, and then this big downside wick with a small body. Had this closed, but I'm sorry, had this candle here been a little cleaner like this one, I would have slapped that on. And or, by the way, this exact setup here, if we were in a trend market, I also would have slapped that on. But being in a range market and now making this push, which, by the way, I'm willing to buy as high as I need to, but it's got to be clean the higher it goes in a range market. I'm just thinking out loud. All right, there's a big outsized bar. We getting headlines? Yeah, so I know you guys are looking at the 5-minute chart. Let me kind of walk you through my thought process here. That was a clean close on the 5-minute. And there's a very legitimate argument that I missed this opportunity, which, again, I'm not going to be perfect. Every trader is going to miss a trade here or there. It's going to happen. It's just part of the game. You're not going to take every setup. But here, you know, you saw this second bar closing. I wouldn't... Personally, I wouldn't say that it was perfect. We saw this second bar closing inside of this wick, and then we got a push. It was clean. It was a good setup. And by the way, I'd be saying this even if this bar was sideways or down a little bit, but we happen to get a nice big push. So probably a missed opportunity here. Part of the game. You don't have to be perfect. You just got to be good. All right, now, by the way, the recent high on May 2nd was at 20,276. Okay, look at the daily down here. The high of this May 2nd bar was 20,276, which we are currently, like, at. Now, these bars are outsized. We've seen this scenario many times. Big outsized bars, you get that temptation of a rubber band snapback. And it doesn't matter where you are as far as percentage gain on the day, by the way. You can get this returning from a big red day, and it still can cause some issues as far as my edge. Because see that? You're getting a shrinking bull body after a big, giant, outsized bar. A lot of times what you see is bears try to step in. Now, whether or not they succeed, 50-50. But I'm not interested in 50-50. All right, now you see this, you saw the bears trying to step in. You get those shrinking bull bodies, at least a shrinking bull body, on these outsized bars. You oftentimes will see an attempt at a reversal sequence like we're seeing right now, this little doji. This here is one of those scenarios for bears where it's like, okay, if you're a very low probability very high potential reward to risk trader, there you go. Again, probability is low. But the earlier in a setup you take a position, the lower the probability. That's the way it's going to operate. The more data you have, the higher the probability, but the lower the reward to risk ratio. What a beauty of a push though, huh? So we talked earlier about that 19,960 to 20,000 problem area, and we cleared that here inside of an hour. We were testing that. We were just talking about this less than an hour ago, 45 minutes ago. And we've now made light work of that, and we're out of there. Which makes our job a lot cleaner. But again, here you go, getting those topping wicks. Like we just talked about, the bears are going to attempt a little reversal sequence. Because, you can't forget, we're not in a trend market. Okay? So, again, I need clean setups to buy the higher it goes, which is fine. But we haven't had a clean, at least for me, we haven't had a clean setup since the one we took. But I know those bears are looking at this inertia and trying to step in and saying, hold on now. Hold on now. This isn't a trend market, bulls. Doesn't mean they're going to succeed, by the way. But they're going to try. Tromisha, what do you do when you're trying to trade ranges and every stock is just running? Well, you got to either wait for the range to develop, or you got to start trading what's in front of you. Look at the market inertia, but be willing, and keep that in mind, but be willing. Like, for example, we talked earlier this morning, hey, let's be straight up. The market is in a range, okay? We are in a ranging market. This is not a trend market, but the money we made so far today it was on a continuation setup. Right, because it was clean, and yeah, old school. It was a long way, but it was worth it. So I'm still watching here. If we get another super clean continuation, I gotta slap it on. I don't care how high it goes, but it's got to be clean. Okay, now in a trending market where it's one of those markets where it's up 6 days in a row, and everyone on Reddit is like, I'm loading the boat on puts, and then it goes up 6% the next day. That's a trend market. I'm willing to allow the continuation setups they still need to be clean, but they get a little more leeway out of me. Okay, whereas in a range market, it's got to prove itself. That's to earn its way into my positions window. All right, now bears are successfully putting in a little flat top here. Flat tops tend to tempt, however, you could argue a flat bottom as well. So they're not giving up on that reversal sequence we just talked about after that big push. Again, you get a big push, outsized bars like this, especially in a range market, that can start to cause some hesitation out of the bulls. Bears get a little bit of confidence. They're like, oh, this price. Oh, we're in a range market. This price, I'm going to short that. And then you end up getting a little bit of an attempt at a reversal. Now we'll see. Again, if the bears put in a 3-bar continuation reversal with no problems as far as the 20 EMA on the 5-minute, there you go. That's another idea for me. If you guys are new here, if you wouldn't mind, leave a like on the stream. When you like the stream, it makes it pop up for you each day, which helps me and makes your life easier. But mostly helps me. All right, so I'm watching for a potential reversal sequence here. I would need to see 3 consecutive bear bars, ideally same size or growing, with the 3rd bar closing at or near its low. That's what we're watching for. Now, after a push like that, again, very common in the market lately, we've been seeing this daily. You get some kind of push like mid-morning, then the market goes sideways, ascending channel, descending channel, it starts to form, it starts to flatten out compared to the move and form a bit of a channel. Now, that channel can be tradable, it can not be tradable, depending on if it ends up going ascending, descending, or sideways. The only one I can't really trade is perfectly a sideways channel. So let's see if we can pick a direction here and put in a little wider channel. Yeah, Tromisha, yes, you're correct. I do not want to see a big wick because that means that, especially in the last few seconds, it means that the buyer-seller relationship is a little more even than I need it to be for me to slap a buy on the rollover or a sell on the rollover in a bear sequence. George, some trades take seconds and net you the most. Some trades can be swings. Do you only trade intraday? Intraminute? No, I shoot for my trades to, on average, take like less than 5 minutes. Some of them will end up taking longer. And that's normal. As ATR comes in, I lean harder, which is the average range of a bar. I lean harder into negative reward to risk, which brings the trade duration down. But as far as futures, listen, I like to hold long term and bet on the US. I like to trade intraday where I'm in control. I can run my data, know what does and what doesn't have edge for me. I'm in control. A lot of people will tell you swing trading is way safer than day trading because you have longer to be right. I 1000% disagree. I think the people who say that can't trust themselves to do the right thing intraday or track their data and they just make random decisions and then they say, day trading sucks, day trading's a scam. It's not. It's just really fucking hard. It's really hard. It's a lot easier when you track your data and you start having confidence that you have edge. So for futures, to answer your question, I trade futures intraday. I hold stuff long term. I hold the market long term. And then the only like swing-esque style stuff really that I do mostly is net short option strategies, whether it's just basic like wheel running or spreads for anywhere from 7 to 45 days out, depending on the confidence level. Because I don't want to be at the mercy of a CEO who wakes up in a bad mood or wakes up in a great mood, depending on my position, and decides to just go say something to move the stock. And that happens all the time. Overnight gap risk is something that gets heavily overlooked in swing trading, and I do not like that. I sleep way better at night when the only things I'm holding are really long-term stuff where we'll fail if the US goes belly up, and in that case we have way bigger problems than money anyway, or net short option strategies where I know that every hour I'm asleep is more edge in my favor anyway, over a big sample size. Just being directional overnight, no, I'm not into it because I don't want to be at the mercy of some guy or some lady who wakes up and just makes a decision to say something and then I'm screwed because of it. Not into it. At least intraday, I'm in control. Alright, so we're definitely coming into a little channel here. But it needs to widen out. This little fade here, I much prefer when we see this move higher. And then if we were to go descending channel, fine. If we could do this kind of thing. This little garbage is really, really tough. You get a lot of dojis, a lot of wicks, a lot of indecisive nature out of the market. Well, here's where we sit. Yeah, John, I'd still be looking. I'd take continuation if it sets up. Here's where we currently sit. It was patience paid today. We had to wait out Trump. He was 45 minutes late. Originally scheduled for 9. They pushed it to 9:30, and then they came out maybe around 9:45, 9:50. Started talking Central Time, that is. But we caught one trade. You know, maybe left one other opportunity on the table, but honestly, I gotta tell you, I don't like to dwell I have a very short memory. A lot of guys will tell you, a lot of people will tell you, I remember every trade I've ever taken. That's crazy to me. I barely remember last week, which is why having them all filmed helps. But you know, that setup that we I guess quote unquote missed. I'm not gonna dwell. It really wasn't that clean. But we caught a good trade up, 3,500 bucks so far here today. So, you know, I'm cool with that. Let's I might come back and trade the afternoon. I don't know. We'll see. But anyway, guys, listen. Hey, I'm running, as you can see, Apex Funded and Take Profit Pros, both of which have their benefits. Take Profit, daily payouts, currently 30% off, no activation fee. Use code BIG. And Apex right now is 80% off. That is, of course, a temporary deal, and you can pass in 1 day with the same code. All right, guys. Appreciate all the regulars showing up every day, being active in the chat. If you're new here, hope to see you become a regular. And I'll tell you what, I will see you tomorrow morning for our regular scheduled programming, 8:15 a.m. Central. All right, guys. Have a good day. Be patient. Let it come to you. Trade well. I'll see you tomorrow.